Good morning and welcome to the game plan, everybody. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we have a lot to go over today. We had some pretty nasty earnings from Texas Instruments yesterday after the bell. That stock is down more than 10%. Now, the key here is Texas Instruments is a semiconductor that had run up about 55% going into earnings from the April 7th lows. The whole semiconductor sector has been soaring, obviously, and leading the markets up. This is the first big report in the semi index or the semi sector that is now maybe making people question whether the semis are priced too much to perfection and are they going to pull back. We'll take a look at that chart on Texas Instruments. We also have the meme craze going all out. Yesterday it was Kohl's. Today DNUT. Also, GoPro is making a move. What is the next big mover? We'll take a look at that. And obviously, we're going to look at other stocks in play today. Enphase, AT&T reporting earnings, and Bitcoin. Will go over the chart levels on that. All right, so number one, let's jump right into the charts today and take a look. And what we could see here, if we take a look at the S&P is up. Now, why is the S&P up today, right? Texas Instruments, not so good earnings. Enphase down on earnings. Ultimately, the reasoning is trade deals. So we know the August 1st deadline is basically 1 week away at this point, and it was announced last night that there was a trade deal that was inked with Japan. All right, so first major trade deal here with Japan, 15% tariffs basically across the board. And that, again, pushed the futures up into the overnight. So if we go back to the S&P futures chart, you can see that this was yesterday. We had the initial dump, which continued the previous day sell. We then kind of went sideways to grinding up the rest of the day, then sideways after hours. And then right here is where that trade deal was announced. And we saw the S&P move up, small pullback, and then basically just grind up into this morning. Now, again, the question I have is, will the Texas Instruments earnings push the semis down, and will the semis take the overall market down, or can this trade deal and the possibility of other trade deals keep the markets from rolling over? Now, if we look at the S&P daily chart, we always want to do our daily check-in here. We can see that, again, we still had that topping tail, which was on Monday, as we are below this longer-term major trend line. And now remember that once you get below a trend line like this, the one that goes all the way back to April 7th, this means the market is vulnerable. It doesn't mean the markets are ready to drop, because we know as long as the meme craze is going on, it's telling us retail investors do not care about anything but momentum. And therefore, they're willing to put more money in the markets, right? So it doesn't, again, mean the markets are going to fall like now. It means that you're in a warning zone. Essentially, think about it like this. There's a yellow flashing light in front of us. It's not a red light, which is a stop or a danger. It's a yellow, which is caution. And I think that's the best way to kind of put it in terms of where the market is right now. All right, so again, topping tail is in place. Let's watch today. The one level I'll be watching today is, do the markets come up, and do they close above the topping tail high on the S&P? That would negate it, and essentially it would just push the market likely up into this white trend line, which still is obviously a major resistance level. But again, 63.36 looks like the high pivot from Monday. That'll be what would negate any daily close above that, would negate the topping tail, which is an additional negative signal for the market. So you'd still be below the trend line, but you would get rid of the topping tail. If we don't close above the topping tail, then it obviously continues to have a negative additional bias to the markets on the S&P. The dollar today, the DXY, you can see again, we've kind of been just bopping along this lower trend line here. After pushing up here, we've come back in. Today on the daily chart, we are up slightly. Now, one thing I want to mention, guys, is today at 1 p.m., there is a 20-year bond auction. And so, again, the long-dated bonds are the ones that I focus on. Short-dated, that's not an issue, right? Because, again, you're only looking out 6 months, a year, or 2 years. But I'm really curious about the willingness of foreign governments to buy U.S. debt when it's so far out, the 20-year, the 30-year. I mean, 30 years out in the U.S., at the rate at which we are accumulating debt. I mean, where is the U.S., the debt going to be? Is it going to be 60 trillion, 90 trillion, 100 trillion? where is it going to be ultimately unsustainable? Now, listen, I will say this is I do think that the power of the president, he has these trade deals that he's trying to get, and these countries are trying to get their best deal. So I do think there's incentive for, in the short term, for these foreign countries to buy U.S. debt to say, hey, listen, we're still helping the U.S., so give us a good deal. But once the trade deals are done down the line, I'm curious to see if these entities, these foreign governments start to step back from buying U.S. debt. So essentially what I would say to you is that the 20-year bond auction today, it likely will go pretty well. I'd be somewhat surprised if it doesn't, considering the trade deadline is coming up and so many governments are looking for beneficial treatment on those trade deals. All right, so here we are. Let's go to the 10-year yield. The 10-year, again, is up slightly, 1, 2, 3, 4, 5 down days in a row after a big move up. Notice, again, we kind of came right into this little pivot here from July 10th. That's kind of the low from yesterday, small bounce, but we're still stuck in what we would call a wedge pattern. And remember what a wedge pattern is? It's essentially consolidation. It's a bigger move where you had this high from 4.8% down to 3.8%, and then smaller inside moves getting tighter and tighter like a spring winding. And essentially, as we all know, if you've been following these game plans and my teachings, the idea is wedges compress price, or compress, in this case, the yield, until we get a breakout or a breakdown. And then once you get that, it's usually a major move in that direction, right? It's essentially breaking out with a spring-loaded move that can go exponentially in that direction. All right. Let's flip over to Texas Instruments. Texas Instruments getting pounded down about 10% today. It did get around as low as 188 in the overnight after closing yesterday at 214.92. Now, I've already isolated my level here of what I'm looking for today. This would actually be a really good pivot point for a swing trade. Now, day trades, there'll be other levels, right? I mean, there's going to be a level right in here. Basically, the 188 level right here was a good day trade. We already saw the bounce there. But on a swing basis, I'm going to follow really closely this 176 to 178 zone. And it's a 3-factor level. And you can see right here, I've already written them on the screen for us. Again, we have the descending trend line. Let's look at that first. So your high pivot, which was your double top. By the way, this is a classic double top. And again, if you don't know technical analysis, understand what double tops are. Again, previous major high from November, we came all the way on a straight shot with almost no pullbacks right there. Notice how price violated the level. That's done almost every time. It's very rare you don't at least pierce the previous high. And then right away, price comes down, and then we're gapping lower sharply on earnings. So we have the descending trend line, and that comes in right around 178, right? 178.50. Then we have gap fill right here at around 176. And then interestingly enough, I always love to use my fibs as a secondary factor. We bring this up here, and we can see again, Fibonacci 50% retrace is right in that same range, right in this kind of 180 to 176 zone as well. So for me, again, that would be a level where I would expect support to be a little bit firmer and potentially even give us a short-term multi-day bounce. I don't know if it'll hit today. If it does today, that would be amazing. But certainly in the next week or two, 178-ish, give or take, could be an interesting level to play for like a $10 bounce on Texas Instruments. All right, next up, FI here, FI or Fiserv. This one, again, if we go to the intraday, look at this drop on this. It actually had a great bounce initially. It's starting to come back in. But again, trading around 140 after closing yesterday at 166. If we look at the daily chart, we have to zoom out and go down to these levels here. So even these pivot lows, price is already below that. So right away, that goes off the table. You don't even need to care about that. The next level for me, I would start looking at basically a zone here. So you have this zone here at 130, right? And then I would draw that trend line in and then raise it up right to about 136. So this area here from this low to this area would be of interest to me for a potential trade today. I'll be keeping it on my radar. In addition, what we always want to do, folks, is kind of keep our eyes on the bigger picture. And you can see another pivot back here just below that around 127. But let's run our fib. Let's do our fib from the beginning of this bull move in 2022 all the way to the highs. And you can see that in this case, really, you don't have anything here. The 618 is up here at 145, and the 786 Fibonacci is at 119 or just below. And so really what I'm looking for is a secondary, like if the fib was right in the middle here, that would give me additional credence. We don't have that. Now, it doesn't mean that this level won't be good. It's probably just good for a shorter term trade, meaning, again, the more factors, the more likely. Like, remember Texas Instruments, you had 3 factors, and I could even be not seeing another factor. But when you have one factor as a day trade, yes, maybe as a quick swing trade, but I wouldn't get married to that level too much in terms of a longer term level. All right, here we have Enphase. Enphase selling off on earnings, essentially as the tax credit goes away for solar. Enphase basically said they're going to see a likely 20% slowdown in residential solar installations. The stock obviously is down, although it's not down too much, because let's be fair, it's already been beaten down. I mean, look at the drop on this. Now, this is going to be a major level. Notice downsloping, descending trend line going back to February 2nd, connecting through our high on November 15th, through the low on November 15th to the low here in May 2025, to the low in June. And so the idea is every time it gets down here, you get some sort of bounce, right? And so let's not reinvent the wheel here. Let's just say, okay, well, if price were to drop into this trend line again at around $30 Pierce, you would expect some sort of bounce off of it. And so again, that'll be the level I watch, basically a $30 bounce Pierce. The stock, again, currently is quite a bit above that. It's around $40, but I'd be interested in a swing trade if it gets down to $30. AT&T reported earnings. The stock down slightly on the day. Nothing too crazy there. Let's talk meme stocks now, guys. The meme craze is nutty as can be. But again, when you see this going on, and this is the same in crypto, right? When you start to see the altcoins, like the crappy coins, like something on the 500 number list or 300 of market cap, and they're going up 100% in a day, that's where you get max speculation. And for me, and I've learned this the hard way, is that that's the warning sign that we're getting to the end of the bull, right? The bull is kind of coming to an end because it's mass speculation on really, frankly, crap. And crap is, again, another signal that once that runs, that's really kind of the end of there's nothing else to run, right? Once the crap goes, there's nothing else really at this point. So you're starting to see it. And I apologize if some of you guys have favorites, are Krispy Kreme fans. It's not to say that Krispy Kreme doesn't make a great donut. It's just that, again, the stock is not, I mean, again, is this even going to be around in a few years with the debt levels, et cetera? Now, the stock, again, is up near the highs here, nearing 6. Just yesterday, it was at 3. So you could see, again, a massive, massive move up as, again, this is being picked up. Remember, yesterday, KSS was picked up and run pre-market. It ran from $10 to 21. It then collapsed, catching so many, essentially a rug pull right there, down to 13, and it went sideways. That's done now. That's done. So, these type of meme crazes, they move on very, very quickly, right? Open Door was recently as well. And now look at Open Door. I mean, Open Door 2 days ago was at $5. It's now at $2.60. It's down 50%. And so I just caution. I'm not opposed to playing meme stocks, but you have to recognize that they don't last very long at this stage of the market. They run up within a day or two, and then the bottom pulls out and the dumping begins. And you don't want to be stuck in that once the dumping starts, right? So just be aware of that on these trades out there. GoPro's another one. Big move on GoPro. It's already starting to come in. But again, notice these are names of companies that if you go to the daily chart, right, this used to be this was the hottest stock back in 2014, 2015, and it's just gone slowly towards basically zero. And now it's getting picked up and run because it has a lot of shorts in it, short squeeze candidates, etc. And so again, you can see here just since the 30th of June, which was, basically this is the weekly chart. So this is going back a little less than a month. This was 60 cents. Now it's $1.50 essentially even higher in the actually 240, excuse me, 240 in the pre-market, got as high as 270. Again, can it continue to run today? Sure, it could. But once the top is in, it's going to fall back very, very quickly. So again, these are ones where I start to look. Like one of my favorites right now that I'm keeping an eye on is WeRide. WeRide has a history of big pops. Here you can see, again, this was when NVIDIA invested in the company. It shot up. This is autonomous driving in China. I like this little breakout. It's been grinding up. Hasn't really had that mammoth bounce, but these are the types of ones that I'm looking at, the right around $1 billion market cap that, again, they could be. And I say could because you don't know. It's a crapshoot what's going to be the next meme craze, but something like WeRide would get my attention as, again, if you zoom out on the chart, it's very similar to some of these other ones that are getting run to the upside to the nth degree. All right. So again, if you're looking for the next meme craze, start looking for charts like this, ones that a few years ago or, just even earlier this year were sky high. They've kind of lost their momentum. They're still at their lows. They might catch fire. Again, don't know if it will be WeRide or anything else, but these are the ones that we can watch to see. All right. Let's get into Bitcoin here. We flip over to Bitcoin. Bitcoin, again, tried to break out of the bear flag kind of consolidation, got rejected here, guys. So again, this is still a bearish pattern. Again, it's only a bearish pattern. Like if you didn't have this topping tail here, this would be considered a bullish flag pattern. It's really amazing, these nuances, guys, and I'm giving you guys some serious education. I mean, these nuances, like what I'm just pointing out in terms of the topping tail being the differentiator here, that is huge. I mean, you can go to literally institutional traders and they don't know this stuff. But again, it's my goal to essentially give you guys the keys to the castle so you can at least compete and if not beat the institutions at their own game. So understand that you got your topping tail. As long as that's intact, this consolidation is considered bearish. If you close above the topping tail at 123.265, let's say, then it obviously negates it and the bull will continue to run. So again, just a very nuanced period here, but it's the differentiator between what probabilities are saying for us. Is it downside probability or upside? Right now, it's favoring the downside because you haven't negated the topping tail just yet on the charts. All right. Next up, let's take a look at Ethereum here. Ethereum didn't quite get to my upper trend line here. Maybe there's still one more bull run in Ethereum. The idea here on ETH is that you have your downsloping trend line here, and we didn't quite get there. It has pulled back. Major support is going to be at 2,800. That would be a no-brainer buy if it pulls back there. But if it gets up to 4,000 or pierces 4,000, that would be significant resistance. Gold. We were watching to see if gold would break out yesterday. Take a look here, guys, at gold. Love this charting. So you can see it closed fractionally above. Did it confirm? Nope. And sure enough, gold's pulling back. So they tried to fake a few people out there. I don't think many people would get faked out there because it's such a small close above. Remember, really to be a firm, you want to see confirmation, a confirmed breakout, which would require another close above yesterday's high today. Maybe we get that. Maybe if the bond auction goes bad, maybe gold rallies. But either way, right now, gold is pulling back. We have a very tight wedge, though. Price is going to have to go big time in one direction. It's either going to break out and go and probably pierce all-time highs, or it's going to have a breakdown here and have a bigger move to the downside. Because again, look at how the wedge is compressing price. This is a really compressed chart, a lot of energy. The question is, which direction is it going to go? Silver, let's take a look at silver. Remember, silver was into a key level. It did close yesterday above the topping tail. So this is what, if you're a bull on Bitcoin, this is what you want to see, right? Here's your topping tail high right at this trend line. And yesterday you closed above it. Now, technically, even though you negated, so this is now negated. So let's kind of make sure we're teaching. So that candle now no longer has power because you had a daily close above the high. Now, still, as of yesterday's close, we're still into this major trend line and we're above it right now. But let's see if we can hold above it throughout the day. That would be the next positive for the bulls. And I do believe that if we can really get above and confirm here, I actually think you could make a run at that $48 to $50 level on silver. But again, let's watch and see where it closes today. Can we close above? Can we confirm? And then maybe the momentum can take back over. Next up, oil. Let's take a look at oil real quick. Oil just continues to go lower. Again, classic flagpole, bearish consolidation within a range. Notice closed below and continuing down. It is getting close to support, though. Let's be fair. It's not that far away from 63.70, which would be a good support level on oil, potentially for at least a bounce. You might even get a bounce back to the scene of the crime, back to, let's say, 67. But once it breaks, eventually you would assume this would break lower eventually and go down to that 60, maybe even further level. Lastly here, Nat Gas. Look at Nat Gas. It is piercing this support level. As of now, I am not looking to buy Nat Gas here. The reason I'm not looking, 1, 2, 3, 4, fourth hit of a trend line, 50% chance that it can go through. So once a trade is 50-50, why are we taking it? I might as well go to the casino. If I play blackjack by the book, I can get almost 50% odds, get free drinks, hang out with my buddies. I'm in trading and investing to have odds probably at 75% or better for success. And so, again, this does not give it to me, so I got to wait for a lower level. My next, and by the way, it could bounce here still. But again, 50-50 just means maybe it will, maybe it won't. Well, okay, there's no trade there then for me. It's a no trade. Support 298 to 299 pivot low here, which is also a multi-factor here. But really, this level down here would be amazing. If we get there, I'll be keeping it on my radar. All right, guys. So bond auction today. Let's hear if there's any more trade deals as well. That's going to be something we watch. And let's not forget, this is big, guys. Let's not forget we have Tesla earnings and Google's Alphabet earnings after the close. I'll be trading them live if you're in Smart Money Stocks and ETFs. We have the earnings trader as part of that. So if you do join that service, not only do you get my swing trades, but you get to join me and the traders for trading earnings. And again, that's in Smart Money Stocks and ETFs. It's part of that service, along with a bunch of other amazing things. Don't forget, subscribe below, folks. Verified Investing on YouTube as well as on X, Invest Verified. And thank you so much for tuning in, guys. You guys are rock stars here that come out every day and watch and learn. And that's why I try to bring my A game every day. You guys have a great one.